Good afternoon, traders. Here's your quick market update covering the US dollar, crude oil, and gold. So starting with the US dollar, the dollar remains under pressure as geopolitics have taken a back seat for now. Markets are no longer reacting strongly to the Israel-Iran conflict unless it significantly impacts the oil prices. With global growth slowing and oil supply still ample, any spike in energy costs may be short-lived. As temporary price drivers like VAT hikes fade, focus is expected to shift back towards the benign inflation and potential Fed rate cuts. And looking ahead, speculation is rising around a more dovish Fed stance in 2026, especially with fiscal concerns and bond market volatility still in play. We expect the dollar to continue adjusting lower, with portfolio flows shifting towards the euro and select G10 currencies. Euro is expected to consolidate before possibly testing the 1.18 to 1.2 range by late July, while other currencies like CAD and Asian forex may begin to catch up as rate cut expectations grow. So next, crude oil. The oil has dropped over 12% since the start of this week and now trading around $65 per barrel. And this decline reflects not only easing geopolitical fears but also renewed market uncertainty. So, three potential scenarios in play. First, if the ceasefires between Israel and Iran holds, geopolitical risk will fade and oil could stabilize. Second, if low-level clashes continue without US-Iran escalation, volatility may persist, but oil supply should remain intact. And last, if Strait of Hormuz is threatened, however, the risk of a sharp price surge and broader market shock will return. And for now, oil's direction remains tightly linked to how these risks unfold. And lastly, gold. Gold is holding near its 50-day moving average around $33.25 as markets price in a likely Fed rate cut in September. While safe haven demand has eased with the recent Israel-Iran ceasefire, upcoming US economic data like the GDP PCE could be pivotal. After stalling near 3,500, gold has entered a short-term consolidation. Unless data surprise the downside or geopolitical risks flare up again, price may drift lower towards the 32.28 or even 3200. And in a deeper correction scenario, 2900 may be tested. So that's your market snapshot. Stay tuned and thank you for watching.